Hello folks, I'm L.A. Little and this is to your weekly TA wrap. We take a look at these markets and we do it from a neoclassical perspective, each time asking ourselves what happened last week and what does it tell us about the coming one. I do the show every Sunday night live at 9 o'clock Eastern Time here from the base of the Rocky Mountains. It is a Super Bowl Sunday, so I'm sure there's a lot of folks watching the big game. I did tune in to see, since I'm from the Rocky Mountains, to see Denver getting crushed. So I turned it right back off again and came in here and started doing some work. Last week, talk about getting crushed, it was the market's chance to get crushed. We had the Dow Jones down 149 points, 15,700 roughly. NASDAQ down 19 points. That's at 4103.87 now. We had the S&Ps down 1160, 1787.29. January losses, 3.5% down on the S&Ps. NASDAQ down 0.5%. And the numbers I saw was the Dow down 1%, although it certainly seemed like a lot more than that. So let's pop over to the Dow to start with. And yeah, this Dow was down a lot more than 1%. That looks like about probably 4%. I think it was a misprint. So if we look at the Dow is the weakest in the group, right? And the Dow has been going straight down. You know, there was a little ABCD structure here on the way down. That ABCD structure, when it printed, if I can get my screen to work, hang on just a second. Here we go. All right, now, as we came down, right, we had an ABCD structure to here. That structure allowed for a bounce, right, and then it finished off. The problem is it never stopped, just kept going down. And at this point, there is no ABCD structure in place. This thing has just broken multiple swing points on multiple time frames to the downside. And if I pull over the weekly, you'll see what I'm talking about. You got just a relentless move down, another swing point broken here. This thing has broken now on multiple time frames. Now the difference in that, you know, that's a high probability of continuation, another 2 to 3 bars on this time frame. The problem for that extension is you're also coming in and doing an ABCD structure for the first time, a retest regenerate structure for the first time. That also carries a high probability that it's going to bounce. And this is on the weekly time frame. So you kind of have conflicting signals on the Dow. Therefore, the Dow, you just have to kind of dismiss. I started with it because of the quote of a 1% down. It really is down about 4 to 5, it looks like. The one that's most interesting is the S&P. And the S&P, for multiple reasons, most interesting, and that is because on this index, it's the broad large cap index. Everybody measures against it, all of that, right? Last week, there was an attempt to break this thing down. They were going after the swing point low, and they held it. They couldn't get to it. Came down into this support zone multiple times. You can see it outlined here in green. Came down in there and tested multiple times. Never could break it down. And so at this point there is the possibility of a bounce, but the bounce doesn't look to carry very much. There's nothing here to tell us that it's going to get much of a bounce. We have to look at the other indexes to see that. But what we do have is we still have the swing point low here. The interesting part of it is that swing point low now is a low also on this time frame. It just printed this week. Because we didn't break down below it last week, we didn't get underneath it, has a lot of volume on it. That now is a swing point low, so you have the structure in place for a faster move to the downside if we break these lows and head down. On the flip side of it, any kind of a retrace up into this area, and I'm looking at the weekly chart now, is going to be very difficult to get over on the way back. You can see the volume expansion over here as we came down in price. But look at what we're coming into and look at the volume on it. If we look at those numbers, it's 194, you're coming at it 196, you're coming at it with 190. It doesn't look like it has quite what it needs to break it down at this point. So when we look at it from that perspective, the only clue that we have here that the bounce may take place is the fact that we're not hitting it with enough volume to break it down yet. But if we move over to the stronger guys, the stronger indexes, and we take a look at those guys, right? This is the NDX, and if we look at the NDX actually has set up the potential for an ABCD structure to the upside. And what I mean by that is you go up, you come back down, and now you have the potential to go up again. And that measures right about to that breakdown bar. That would be the key area on the way up. Now conversely, one could look at this and say, oh, well, there's also an ABCD structure to the downside. For example, I could see one here, right, potentially breaking down farther. So the real test this week is going to be which one takes place. If we pull over the weekly and look at the weekly, you can see here that the swing point low is quite a bit lower. So you're going to have to get a big breakdown, get underneath this bar into the into this support zone to the bottom of that to break that swing point low. On the NDX, on the IXIC, that would be quite a stretch and doesn't look that possible yet. What would have to happen is that we don't lift, right? Because if we didn't lift, if you take this high, 36.34, you take that low, which is 34.64, so you basically got a 70-point move, and if you come off of that, 70 points is going to take you about 34.74. That's going to break, not 34, I did it wrong. Let's do it again. 36.34. 34.60, 36, so it's 170 points. That makes more sense. Now 170 off of there takes you to 34, 33.70. 33.70 is underneath that swing point low and back down into this area, right into here, right? So it takes you down into this area, 33.70. And you can see that would be a break. Now if we go back to the weekly, 33.70 is underneath that swing point low back into the low of this. So you can see how if we didn't get a lift here, we could actually move all the way back into the support zone. And that's on the strongest sector. The IXIC is the same way. Basically the same setup, exactly same setup. The only other one out there, of course, is the Russell. The Russell had been the one giving us the greatest setups. The Russell's interesting because the Russell has that same little ABCD up potential, but it doesn't even get up to that top, right? That's the February 24th bar, I believe. Let me check. Yeah, excuse me, January 24th bar. That 24th bar was the breakdown bar on all these indexes. So to get back above it is the key, right? If you believe higher prices are coming, you've got to get above this. You're not going to get higher prices until you crack this. and you have to crack it on the stronger ones, which is IXIC, NDX, Russell. In that order, actually. So that's the measure on the way up. It doesn't have what it needs to get over it. If you look at it on the opposite side and say, okay, what does it take, or what could happen on the downside? If you don't get much more of a lift, you could see how that could break all the way down here to these lows. And what would it do? It would break multiple swing point lows on this time frame, and that measurement is down to about 1079. So if we pull over the weekly on 1079, look at it. 1079 is underneath this guy. So you could see a fast move down. 1079 happens to be about right there on the top of that bar. So that would give you a fast move down all the way into the top of this bar, and that is the lower part of this support zone. So you got a support zone in here, you know, 3 different levels. We show 3 of them, and you know, that looks to be damaging. That definitely is going to put this longer term weekly chart right into a tailspin back the other way. So the potential on the Russell, on the SPX, the potential is there for a faster move to the downside, and the SPX printing that weekly has set it up there as well. The good thing is that you don't have to go that far to actually break a swing point low on the S&P 500 now, because if I go back to it one more time and look at it, you know, the MTTFs are extremely stretched, and we talked about this last week. 87%, and MTTF is just a way to measure how stretched something is. It's 87 here, 81 there. These are cumulative failure probability rates on this time frame for this instrument. So when you look at it, you know, it can only go to 100. When you look at it from that perspective, you can see this thing is extremely stretched. You're already up to 60% on the sideways move. That's going to break this week one way or the other, I would think. You know, it's going to happen soon, I should say, but probably this week. We have a lot of economic news coming out this week. You've got rate decisions in Australia, in Europe, in the EU, in Britain. You've got flash PMIs that are coming out. You've got a lot of data. Plus, you got all the earnings that now start to shift to the lower, smaller stocks. So this week, you can see that there's a lot coming at this market that either could crack it, or if they're really good numbers and the market interprets it that way, could push it back the other way and push it higher. I suspect this market is going to crack to the downside before it's over. So this range is probably going to give it up one way or the other this week. Either you're going to get a little small bounce on the S&P out of here. This would be the first mark, and then the swing point low. Realize, although I haven't talked about it, there's a retest, regenerate off these swing point lows on the way back up, and that's true on multiples of these. So a lot happening this week. What do we think? Well, it looks like there's a decent chance of a bounce, but a lot of that is going to depend on what happens, I suspect, what happens with the economic front, right? Because those are going to tell the tale. And so far, they've been bleeding red, so to speak. I mean, almost all of them have been, quote-unquote, a little bit worse than expected throughout January. Earnings didn't move it. Economics didn't move it. Tapering continuing, putting pressure on countries, currencies flopping around as a result of it. All of that's putting pressure on the markets. Okay, so that's a good, I think, overview. If I pop over to the world markets, what you're going to see here is you're going to see a lot of pain being dealt to the world markets. I'm going to start in Europe with the French CACs. CACs comes down, gets a big wide price spread bar. That bar right now is holding price. Key on this one is going to be which way it breaks when it comes out of here. You know, will it break to the top side or will it break to the bottom side? It's hitting the bottom side, but it doesn't have as much volume. That suggests it's going to try to bounce, which it already has started. big kind of a hammer move. I would expect it's going to try to get up into this resistance zone, and then we'll see if it can get over it or not. So a little bounce, it looks like there in the CACs. If I look at the DAX, the German market kind of set up the same way. Big wide price spread bar, again, gets underneath it. About the same volume, big hammer reversal. That also looks like it wants to try to get back to the top side, up into this area, potentially as high as there. It's going to have to get over these, right? And that is a retest, regenerate this whole area here from this bar to that bar, the bottom top of it. That's the retest regen. As it comes back up there, we'll see if it can get over it. Last time it tried, it failed. We'll see how it does when it just gets back up into what is resistance now. If we look over at the FTSE kind of got the same situation, right? Big wide price spread bar, gets underneath it, does a hammer reversal, also wants to trade back higher. Its retest regen is much higher, hasn't gotten to it yet. German is the strongest one, which has gotten to it. But you can see two big wide price spread bars on the way down with volume escalation. That's going to be hard to get over. First area will be here on the way back. I think there's a good chance it can get as high as there if our markets move higher. And depending on what those rate decisions are this coming Thursday. If I look at the well, we got a lot of markets that are on hold. If I look at Taipei, if I go to Asia, you know, Taipei market only traded once last week. It's coming back into a retest regen zone when they open back up. Well, actually, it's already done a retest, so that's not really quite true. This is just coming back into support. But there was really no volume last week as they were closed. If we go look at the Nikkei, though, the Nikkei was open most of the week, down again tonight about 1%. I've got it on the weekly right now. You can see it tested. You know, this was kind of a key test. It went up to the top of this bar, 15,942, broke over it, and now it's 4 straight weeks back the other side. If we pull it over on the daily, you can see what kind of damage has been done on the way back. It's got an ABCD structure to the downside right now. Would take it back into this big support zone. Multiple swing point lows have broken, right? You broke one here. You broke more right there. Got its bounce into retest regen. Didn't have the volume on the bounce. Now it's ABCD down. Looks to me like this wants to trade into this area. So Nikkei not giving any help. Taiwan, they've pretty much been off, so they're not much indication because they haven't traded. Looks like this one has been closed as well. Looks like the data needs to be updated. If I go over to the Hong Kong market, and that's an ABCD structure on the way down potentially. ABCD structure here on the Hong Kong market as they just blew out the bottoms. So you got a big A to B, right, back to C. That takes it way down if it's going to extend. If I look at it on the weekly, you can see the damage has been done here. Hong Kong got up into a higher zone, right? Got up and tested all those highs up here in this zone. It's clearly down in a lower zone now. That lower zone trades back down into this top. And if it gets below that one, it goes all the way back to the next one. This market's in trouble. This is a reflection of the slowing growth that's taking place in China. So all across the world markets, on the dailies, on the weeklies, they're all having trouble. So I don't see anything there that helps these markets of ours. If now I go back to our markets and we go over to the OX indexes, the OX markets, let's start with the dollar, because the dollar is causing a lot of pain throughout a lot of the emerging markets. So Turkey, Australia, you know, and I wouldn't put Australia as an emerging, but it's somewhat emerging. It's got commodities, and actually it's putting pressure on the Aussie because of slowing conditions there due to China. So if I look at the dollar, what is the dollar doing? The dollar is up here breaking out potentially on multiple time frames, multiple swing points. So if I look here, I've got a swing point high, swing point high, swing point high, and another one up here. It's starting to break them, When you start breaking multiple swing point high on one time frame, you can get 2 to 3 bars extension on that time frame, pretty high probability bet. If you bring over the weekly, that high that we see on the daily is this high on the weekly. That's where it's going to run into serious resistance, but it looks to me like it's going to get up there and test it. I expect the dollar to try to move higher. That should put pressure on commodity markets, and it should put pressure on emerging markets as the dollar gets stronger. So dollar continuing to cause problems, if you will, with respect to world markets. If we then shift over and we look at the bonds went up, tested, and got over the little high, volume expanding. These bonds want to try to go higher still. And it's really kind of contra reasoning, right? I mean, you know, why, if the Fed is tapering, why are bonds going straight up? Well, they're a safe haven, folks, right? And right now, as people push into bonds, it's a momentum trade and a safe haven trade, and that's pushing these guys up. Let's pull in the weekly, going after a swing point high. That high is 108.73. We're not that far away. Volume's increasing as we're getting there. Looks to me like the real test will be here pronto this week. 108.37. We traded into it, 108.41. Back underneath it, closed under it on a weekly. It looks like it will try to test it again, and if it can stay in it, it can go higher. But that will be the test this week. If it gets much higher, it's going to break out on a weekly as well. That weekly price point is 108.73. We're trading at 108.28. Bonds increasing is driving the interest rates down, and that also hurts the market. Helps a few sectors, but mostly hurts the market. Okay, that's bonds, that's the dollar. Those are the main things over here. Let's take a quick peek at some of these other markets, just see what they look like. USO. So up into resistance. I'm going to slide it over a little bit so that I can get both of them. Up into resistance. Wow, if I was still doing my classical TA stuff, and a lot of people don't realize I actually understand the classical, but that's what I traded for many, many years. This actually has the correct, and a lot of people don't use the volume stuff that McGee and Edwards talked about, but this actually has the ABC, the head and shoulders pattern. What you're supposed to see is increasing volume on the left shoulder, on the head, which is exactly what you had, and decreasing volume over here. So far, that is kind of the setup on the USO. That, on a weekly basis, looks like the oil market's not going to go up, and this looks like a failure on the daily. So I think oil has probably done what it's going to do, which also is not good for XLE and some of the others. We haven't looked at the sectors, but the XLE is one of the weakest ones out there, and you can see you're starting to get ABCD structures to the downside again. You had them up here. Actually, you had multiples. You had one here that finished. You got another one from there down. Got a bounce, also finished. Now you have another one that's setting up here, right, to go much lower. ABCD structures here on the daily. I suspect they're also on the weekly. Let's see what that one looks like. This is the first one to start setting them up. Yeah, you didn't get an ABCD structure. You're just breaking swing point lows. So you got multiple swing point lows broken. It should give you 2 to 3 extensions, bars extension to the downside. You got one, maybe another two, or another one or two to go. That's the weakest one. If I go over and look at, I want to look at the currency, the FXE, and I want to look at the ones that are going to have rate decisions this week, to see how they may play into the dollar. FXE looks to go lower. Yeah, that's on the weekly. Let me see what the daily is. Yeah, so you broke swing points, multiples. That looks to go lower. Let me see about the the yen, which is the other larger one, and this is what's hurting the Nikkei. As the yen goes up, which is what it's doing, here's the weekly. So a retest regen on the yen won't take place until you get back up to this price point. That price point is 96.69. We're trading at 95, so another full point, another 100 ticks. That's going to put more pressure on the yen if that's in fact what happens. And if we look at it on the daily, it's actually testing into that high, hit it the first time with volume. Looks like it's going to test it again tomorrow. So you've got a break on at least one swing point, potentially two on the daily. This thing looks to me like it's going to get up into here, 98.46, and 98.46 is into that swing point. So that's a long way up. That's going to kill the Nikkei if in fact it happens. So that's Nikkei is going to struggle. And the other one is the Aussie. So the Bank of Japan just did their thing last week. The Aussie's got a rate decision. So this one has broken already on multiple time frames. So 2 to 3 bars extension is what you should expect. You have 1, 2. This one may not get any more, or it potentially could get one more dive off of that rate decision. If they decide nothing, I would expect another dive. Yeah, it looks like it's going to hang here for the decision, which is Tuesday morning, I believe. The euro we covered. Bank of England will be the other one. Let's quickly look at that one. Okay, just pressing higher, and on a weekly, on the daily, yeah, that was just waiting on the rate decision, but the trend is clearly higher. That's a big ABCD structure. No, actually, it's already finished. It's finished twice now, so that one's about done. All right, so what do I think is going to happen here on a weekly basis? There's the potential for a little bounce, right, in our equities. But there's nothing there to suggest more than a small bounce, if it gets it. The risk is still to the downside. Now you have the potential for a faster move to the downside as well. So when I look at all of that, I'm not interested at all in trying to chase this market higher here. And I suspect what you're going to see here is potentially a nice little bull trap. Let me go back to the SPX. Or actually, let me use like the NASDAQ or something, and I'll show you real quickly what I mean. And while I'm on that, let me also clear up one other thing. Thursday, I misinformed you about the monthlies. I was wrong about those. And when I pull this up, I'll pull up the SPX because I was talking about this. And I was saying that I'd never seen it set up this way. Well, the reason for it is because it wasn't what I thought it was. This has already printed a swing point low. It's had 6 bars. 6 bars was here on the December bar. That printed this swing point low. So it was a no op. I got totally confused in what I was saying. So to clear that up, that doesn't really have any consequences. Here's the S&P. Oh, I want to go to the daily. Here's the S&P. If we were to get a bounce back up into this area, 1811, right? If it could get all the way up there, and I don't know if it's going to get there, but if it get up to here, right? Potentially people are going to chase this thing on the way up thinking, all we've ever seen for about a year and a half now, or a year and 3 months, is almost every pullback has been bought, and if you didn't buy them, you were stupid, right? That's what the market has told us. So if this thing starts to move higher, you're going to see bulls pop into this thing again thinking, okay, here it goes. Well, what if it does bounce up to here and then it falls and starts coming back? That's a bull trap, right? And that would be much more painful in like the NASDAQ, the NDX, those places, because that's where people are going to run to probably first. So I suspect maybe a potential little bull trap bounce, but I don't see this market going that much higher. I'd be very careful if you're thinking that's what's going to take place. I'm going to leave it at that. Have yourself a great night. Thanks for joining me, even on a Super Bowl Sunday. I'll catch you tomorrow. We'll do it all again. Going to be a big week, first of the week. Monday, Tuesday is probably where we're going to get a break one way or the other. Have a great night. Take care of yourself. Good night, folks.